Hi and welcome. Today let's focus on something that matters in investing, and this is how to look for companies that are of good quality and undervalued at the same time. I have masters in economics and finance accounting. I am making more than 40% on the stock market every year. This is an average for the last couple of years. And this is way above what a normal investor makes, because I think that on average they make like 3%, but of course they make a lot of mistakes. But look, in here I will show you a very natural, logical way to analyze any business, and everybody will understand it. It's very simple, straightforward, and it's very logical. So look, there are like thousands of companies, right? So we're looking at only the best ones possible. In here, for instance, profitability, look, it's 10 out of 10. It's 90% gross margin. This is the highest I have ever seen. Return, of course, maybe I have seen higher, but it's like super high. Return on assets is very high. Return on investments very high. Net margins 30% is high. But look, the price is crashing. So they're making way more money than industry and compared to themselves in history, but the price is crashing. So maybe it's because the financials are crashing, they are making less money. But if you look at the growth here, look, everything is going up. 20% increase over the last 10 years, nearly 20% increase in revenue, so all of the money coming into the business in the last 1 year. Free cash flow, this is EBIT earnings. In here also earnings, everything is growing. And it's growing quite rapidly. Look, this is the revenues, earnings, everything is going up, 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 up. So if we compare it, in here this website gives us significantly undervalued. But look, if we compare where the financials are going, look, the revenues, the purple line, the cash into the business is increasing. And in here we have price to book value ratio also going up. So Adobe, this company looks very healthy. The financials are going up while the price is going down. In here we have earnings. Look, earnings, the green line is going higher and higher, and the price is going down, down, down. So this looks like it's undervalued. And based on the whole history, 26 more, nearly 30 years of this company, this is nearly the lowest price it has ever been available to buy at. Oh, and this company is not paying dividend, and this is good because dividend is double taxed. At least I like it, because it means basically more money and less taxes. Let's look at discounted cash flow analysis. Alright, so this model shows margin of safety of 72%. This is great. And lastly, let's check cash flows of Adobe. In here, what I will be looking at are investments. I want to see some investments, meaning that they will grow. Cash flow from operations growing steadily. Cash flow from investing, okay, it is negative, but it's very small. However, I can see that there is very big cash flow from financing, and this is fine. Repurchase of stock, that's the best thing they can be doing with their money right now, and I totally agree with that. So this is just a great thing that they are doing for investors. Share buyback means that they are buying back stocks from the market, and there are less and less stock, therefore you own more of the company, right? So an easy example, let's say that there are like 5 stocks and you own 1, so you own 20%. But if the company buys back 2 of those shares, then there are only 3 remaining out of 5. So 3 remaining, and you own 1, so now you own 33%. So you didn't do anything, but your percentage increased from 20% to 33% because the company is buying back its stock and gave you 50% more shares. So yeah, this is great. I like those cash flows. I'm really glad that the price of this stock dropped so significantly and is more than 70% from the top. And yeah, that was the company that I'm currently looking at. I'm also looking at a few others. Of course, I was reducing a little bit to buy something else. And I was also looking at Intel. This is a terrible one. Duolingo looks much better. Look at that price drop. This is like a huge crash while the company is growing. Netflix is also okay. Look, everywhere green. The price drops a little bit. Is another great quality company, or at least used to be. Maybe now it's a more competitive market, but of course no story is perfect. Right, so thank you for listening, and I hope to meet you in the next one.